the process of onboarding an NRI client. I've been managing NRI clients since last 17, 18 years. Firstly, they need a PAN card and OCI card, okay? Then of course the complexities of NRE or NRO account, a PAS account. You can have only one PAS account with one bank, so that is another 60 to 70 signatures for them onboarding. So the entire onboarding process takes around 3 to 4 months. Yeah? If they come to Gift City, okay, all this hassles goes away. Yeah, you don't need a PAN card, you don't need an OCI card, no need of a NRI bank account in India. Yeah, so that way, and it's a very simple process of.
So that's one big point, right? You can directly transfer money from your US or whichever country bank account to the fund in Gift City and get it back into that account.
Yeah,
you don't have to touch an Indian bank.
No. Yeah. So as I told you earlier, it's an SEZ, yeah, so it's an offshore jurisdiction. So money comes into Gift City, and from directly out there only it can go back to, say suppose a client has transferred money from his Dubai bank account of ADCB. Then the money will go back whenever he makes a redemption or something, the money will go back to the ADCB bank out there.
Your Gift City investing into the global markets, it's considered a global investment. So if an NRI, for example, if we would be having clients in Dubai or Middle East or Singapore, for example, and they use this route and they invest through this product, they will be taxed as per their domicile because the income that they're earning is global income, right? They are not investing into India. Since Gift City, even though it's within India, right, it's treated as an SEZ and a non-resident. So yeah, that's the benefit that NRIs can also reap.
Yes. So just to explain your example, so if somebody's in UAE and there is no income tax there and they invest in your global fund, they don't pay any tax in India either, in Gift City either.
So first, what is Gift City? So Gift, full form of Gift is Gujarat International Finance Tax City. It is India's only approved IFSC, or in simple words, India's only approved central SEZ. So it's a free trade zone, which allows a lot of tax incentives for flow of capital across financial products. अगर हम इंडिया में देखें तो there are four regulators in India. RBI who regulates banks, SEBI who regulates capital markets, broking, mutual fund businesses, etc. Then you got IRDA who regulates insurance and PFRDA who regulates pensions. But Gift City में एक ही regulator है called as IFSCA, and this is a unified regulator which has powers to all the sort of four regulators that we spoke about. In Gift City, there is only one regulator called as IFSC, and this regulator has powers equal to RBI plus SEBI plus IRDA plus PFRDA. Having one regulator means the comfort of doing business is significantly high. So you can have one regulator who can look at everything from banking to mutual funds to insurance, everything within one umbrella. And that's where we believe IFSCA, being the unified regulator, is very, very important for the growth of Gift City. Second is a beautiful part of Gift City is that Gift City, अगर हम देखें तो from a jurisdiction perspective, अहमदाबाद और गांधीनगर के बीच में situated है. But as for FEMA, Gift City is considered a jurisdiction not in India. And because Gift City is considered a jurisdiction not in India, you can deal only in foreign currency in the Gift City. Hence, अगर हम देखें तो fully convertible 15 currencies are allowed in the Gift City, right from dollar to pound to sterling, to Aussie dollar, Canadian dollar, Hong Kong dollar, etc. are allowed as a means of transaction. Interestingly, जब हमने एक हमारा branch setup किया था to Gift City, and we were trying to send laptops to our branch in Gift City, we had to fill import and export requisition form. Hence, the most important thing that I want to highlight to all of you is that Gift, though it is part of India, is technically considered a jurisdiction not in India. And because it is considered a jurisdiction not in India, you can deal in foreign currency in that jurisdiction. Now, coming to the third thing, if you see global money which comes into India, FI investors usually come from Dubai, Singapore, Cayman Island, Mauritius, US, Luxembourg, etc. The idea was, can India attract the best of managers who are based in some of these countries to invest into India? Hence, taxation, अगर हम देखें, taxation, if you see in India, when it comes to the Gift City, is that it's got a globally benchmark tax regime, which means taxation of gift is at par with, say, Dubai, Mauritius, Singapore, etc. However, there is a misconception that any fund that is launched in the gift city is completely tax free. That is not true. There are few funds, if you create in the right manner through a fund of fund structure vehicle, you can make it very tax efficient way to invest in the gift city. And we will cover on how gift city can be a good way for tax efficient way of investing in the gift city in the subsequent slides. So in nutshell, gift city एक बहुत unique opportunity है through which your investors can invest in dollars, in euro, in their local currencies. 15 currencies are allowed. We have one unified regulator, and tax regime for gift city is at par or superior to any other foreign investment jurisdiction the money comes from. Now, what are the types of funds you can launch in the gift city? So there are three types of funds. One is an authorized FME. An authorized FME can get money from accredited investors, can do early stage or venture capital investments. Second is you can start a registered FME non-retail business through which you can raise money through AIF funds, in which case the ticket size is $150,000. You can also do PMS, REITs and InvITs through a registered FME non-retail license. And the third is you can do under a registered FME retail license. You can also do mutual funds, you can do ETFs, and you can do various types of products. As Mire Asset AMC, we have a registered FME retail license. Currently, we've launched AIF schemes in the GIFT City. Hopefully this year we will start launching retail mutual fund schemes as well, where the ticket size will not be $150,000, but can be as low as even $1,000. So this slide, going to the next slide, this slide typically shows a structure of an inbound fund feeding into GIFT City. So first you will have investors who are foreign investors who are seated or living outside India. Any foreign investor can invest. They can be foreign nationals, they can be NRIs who can invest in the GIFT City in an inbound fund. The fund will have a fund manager who will be based in the GIFT City, and it will also have a trust company or a trustee, like you have a mutual fund structure. So there will be an independent trust company as well. Where can the GIFT City fund invest? So the GIFT City fund can invest one in Indian securities, which is Indian shares, Indian bonds, or Indian REITs and invest. I'm sure all of you know that. Second is through the GIFT City, you can also invest in foreign securities or global ETFs as well. So we are launching a fund as early as next month, which will allow resident Indians to invest into global stocks and global ETFs. So GIFT City is not only giving access for global investors to invest into India, but also give access for resident Indians to invest into global stocks. And third is GIFT City will also allow access for investors to invest in securities listed in IFSC. So all of you must be knowing that if you want to track market, you should see what the GIFT Nifty is trading at. So GIFT Nifty is at the moment one of the only instruments which is listed in IFSC. But as we speak, more securities will get listed in the GIFT City. Like ADRs and GDRs, you will have securities listed in dollars in the GIFT City. And both foreign nationals and residents can access listed securities in the IFSC as well. Now, quickly, what Mire Asset has been doing in the GIFT City. So these are a couple of the events we have done. The one on the right shows you a GIFT City event last year held, where the PM, Finance Minister, RBI Governor, everyone were there, and all the top 20 CEOs, global Indian CEOs were there, including Mr. Ambani, Adani, Mr. Kotak, Mr. Mittal, etc. And this includes our CEO, Mr. Swaroop Mohanty as well, who was representing our company in the GIFT City event. Incidentally, we were the only AMC who were invited to this global fintech event. Now, Miraset has a branch in the GIFT City since 2023. We have a 6-member dedicated team looking at fund management, dealing, compliance, etc. Our license in the GIFT City branch is of a FME retail, which means we can do retail mutual fund schemes as well. We are currently managing almost a $300 million fund in the GIFT City. It is called a Miraset India Mid Cap Fund, where currently dealing, fund management, and everything is being done from the GIFT City. We are planning to launch both inbound funds which will feed into Indian equity markets and bonds, and also launch outbound funds which will feed into global stocks and ETFs through the GIFT City. We have already launched an inbound CAT3 AIF fund called as Miraset India Equity Allocation Fund, and that fund is now live for the last 8 months. And we are now launching an outbound fund, Miraset Global Allocation Fund, again a CAT3 AIF scheme through the GIFT City. What we will try and do over the next maybe 5-10 minutes, try and cover on the strategy for our inbound fund in the GIFT City, what makes our product different from some of the peers, and then also cover the global outbound fund as well, in brief. So when an NRI wants to invest into India, he's got typically two questions in his mind: what market cap to invest and what theme to invest. So what we try to do in our GIFT City fund is, instead of some of our peer fund houses who've launched one fund feeding into one fund, so one large cap fund feeding into one large cap fund, or a mid cap fund feeding into a mid cap, or a flexi cap feeding into a flexi cap, or a hybrid fund feeding into a hybrid fund. Our idea was, why don't we give you complete exposure to India? So we've created an investment framework in such a manner that it dynamically chooses allocation based on market caps and themes. 80 to 100% allocation will be to market caps, and up to 20% allocation will be to themes. Now, when it comes to market cap, allocations will be across large, mid, and small. So we've kept what should be the minimum and maximum allocation to large cap, mid cap, and small cap. So the allocation to large cap will be minimum 40% and a maximum of 60%. Mid cap will be between 20% and 40%, and small cap will be between 5 and 20%. And we've kept the flexibility of investing up to 20% in themes. Currently, we like two themes. One is consumption and manufacturing, and hence we've taken allocation to both these themes. So the advantage our fund gets is, instead of investing only in large cap, so if you see 2023-24, mid and small cap did very well. So if you're investing in an only large cap fund, you will tend to underperform. If you invest only in a pure mid cap fund, you will also underperform, especially during this year, because your allocation is only to mid and small cap, which have corrected a lot, while large cap has relatively done better. In our fund, you can dynamically move between large, mid, and small. And this sort of dynamic movement helps you get a better investment experience. Our back testing, when we've done over this fund on our actual NAVs, has shown that the fund over long periods of time, 3, 5, 10, 20-year, 15-year period, has given about 4 to 6% alpha. If we break this alpha of 4 to 6%, 2/3 of the alpha comes from the fund delivering alpha, and 1/3 of the alpha is coming from the allocation mix of large, mid, and small. In the current market, we have about 25-30% allocation to mid and small cap. And because we have about 25-30% allocation to mid and small cap, the recent performance has been impacted because mid and small cap has seen a sharper drawdown. But if you were to see over long periods of time, mid and small cap has been able to give significantly higher alpha, and hence we believe that this sort of will generate alpha over long periods of time for investors. We also have the flexibility of investing in themes. Now, how do we decide market caps and theme allocation? Is one, when we look at themes, we look at structural themes. So we don't look at small sector themes, maybe IT or auto, which we might like for maybe 3-6 months. We look at structural themes only. And based on valuation and momentum factors, we decide how much has to be the allocation to sort of both these strategies. Second is valuation. So in the case of valuation, we try and look at a 1 year forward P of the market, and we compare that with a 5 year historical P to figure out which segment of the market should be allocated to. And we also consider the 3-month, 12-month risk adjusted momentum score to decide how much should be the large, mid, small allocation. So if you to see our allocation mix, currently about 50 odd percent allocation is to large cap, 24% is to mid cap, 7 odd percent is to small cap, and then we've got consumption at about 10% and manufacturing at about 5-6%. We keep about not more than 3-5% cash in the portfolio. That is only for basically rebalancing purposes. The advantage our fund gets is one, you can move between large, mid, small quite dynamically. And in spite of moving between large, mid, and small cap dynamically, there's no tax incident on the fund. So all of you know mutual fund is a pass-through vehicle. So when a mutual fund buys and sells shares, there's no tax incident at the fund. Similarly, when an AIF buys and sells funds, there's no capital gains incident, and hence you can rebalance the portfolio quite actively. Now, when an NRI typically wants to invest into India, he sees 4 challenges. Just before that, like I said, historically, the fund has been able to give 4 to 6% alpha. Now, what are the underlying funds for these funds? So for the large cap fund, we are investing in Mirasid Large Cap Fund. For mid cap, we've invested in our mid cap fund. Small cap, we didn't have an active small cap fund. We just launched our small cap NFO last month, and we've just done the deployment of it. And because we were in the deployment stage, the allocation earlier to our small cap was to our small quality momentum index. Now that our small cap fund is also live, in future we will allocate to our small cap fund as well. The consumption fund goes to our great consumer fund, and we don't have an active manufacturing fund, so the allocation goes to our manufacturing fund. Sort of that is how the allocation is sort of done. Now, when an NRI typically invests into India, there are few challenges NRIs have. First is KYC documentation. Second is taxation and ease of tax filing. Third is remittance and repatriation of funds. And last is currency exposure. Yeah. So let's see if we can get a solution for all of them. So first, who can invest? So for our inbound fund that we are discussing today, the India Equity Allocation Fund, NRIs, foreign nationals, and foreign companies, all of them can invest, right? So I must tell you very interesting data points. 1/3 of the money that we've got in our fund has come from foreign nationals and foreign companies. Now, coming to who cannot invest, Indian residents cannot invest. So Indian resident cannot convert his money from INR to dollar and bring that money back to INR. Second is, any NRI from the world can invest, except he is from a blacklist country as per FATF. And as per FATF blacklist, there are currently only 3 countries, North Korea, Iran, and Myanmar, which are part of the blacklist. So if your investors are not from these 3 sort of countries, you can take money. Second is, in the GIFT City, you can raise money, but there are certain limitations on getting money from neighboring countries of India, which is say Bangladesh, Pakistan, and China. So that 3 countries, which is Pakistan, Bangladesh, China, you cannot take money because of India's sort of regulations on neighboring countries as well. Third is, at the moment, we are not taking money from US NRIs and Canadian NRIs. And I will cover why we are not taking money from US NRIs in this product. As we speak, we are already working on a product which will allow US NRIs to invest into Indian markets. So that product is already, uh, under work, WIP, and hopefully in a couple of months we will be launching a product which will allow US NRIs to always also invest in India. Now, when it comes from grey list countries has certain restrictions, which means you have to do enhanced due diligence. So grey list is okay. We can accept money from grey list countries. Only enhanced due diligence is sort of required. And we will cover what is the enhanced due diligence required. So this is cover who can invest in the fund. Second could be this money can come from an NRI even if he is not based in India. So the NRI can continue to be resident in his own country. They don't need to be physically present in India to be investing in the gift city. So they can be seated in their home jurisdiction. So that is another point that I wanted to highlight. Now, the KYC and documentation is very, very easy. PAN card is not a mandatory document for investing in any gift city fund. So as per IFSCA, PAN card is not a mandatory document. However, as per CBDT, they say that if you take money from any NRI, you should make sure that their PAN number is available. Hence, in our documentation, we are just taking PAN number in case an NRI has a PAN. If they don't have a PAN number, no problem. They can just give a no PAN declaration and they can start investing. Like I mentioned, we already take investments from foreign nationals and foreign companies. And because foreign nationals and foreign companies cannot have a PAN number, hence PAN card is not a mandatory requirement. Next is because PAN is not a mandatory requirement. Of course, Aadhaar is not a requirement at all. What you need is one ID proof and one address proof. And the ID proof is very simple. So all NRIs will have a passport. So that can just work as his ID proof. For an address proof, if their passport has their address proof, then it will work as an address proof. If they don't have it, they can give a driving license or a utility bill or a tax ID or a national ID in the country that they live in. That's it. These are the only documentation required. So just by giving a passport, they can start investing in the gift city fund. If they invest as a foreign company, then the documentation can be slightly difficult. But otherwise, for resident NRIs, the documentation is fairly simple. Now, case of bank proof. The money can come from any foreign bank in the world. It can come from Bank of America, Bank of Singapore, ADCB, FAB, Emirates National Bank, Deutsche Bank Germany, HSBC, any bank in the world. What you need is a bank proof or a bank confirmation letter and a statement showing that the money will come from this bank account. Right? So you need a bank proof as a documentation. Now, because the client is not in India and the advisor may or may not be in India, what is required is an OVD, which is original verified for the document ID and address proofs that we discussed. Who can do it? Any bank official can do it. A chartered accountant can do it. A lawyer can do it. Indian embassy can do it. A notary can do it. And if a Miraset employee is based in that country, like we have an office in UAE, we can also do the OVD documentation for your clients. So the client need not be physically in India. OVD can be done by these sort of individuals. In case you face a challenge on OVD, you can tell us. We will help connect with few chartered accountants and lawyers that we've tried to tie up in other countries who can help on the OVD part for you as well. So we don't see OVD as a large challenge for investors, and we've been managing 100 odd investors already through this sort of route of investing. Now, on the bank, as I said, money can come from any bank account. Money cannot come from an NRO bank account. That's the only limitation. You cannot use your NRO funds. You can use your NRI funds, you can use your FCNR funds, or you can use your foreign bank account. And because the money comes from a foreign bank account, it will go back to the same foreign bank account. No questions on repatriation and remittance is asked to the investors. So the flow of capital is very, very easy, and KYC and documentation is fairly simple. Now coming to the third aspect, which is taxation. So taxation, if your underlying is shares, right? So let me explain. If your underlying is shares, your investment, you will have to take an FPI license, and your long-term tax will be 12.5%, short-term tax will be 20%. In our case, we are a feeder fund feeding into a mutual fund scheme. Now, a mutual fund, when they buy and sell shares, is a pass-through vehicle. So mutual fund never pays a tax when it buys and sells shares. So there is no tax incident at the mutual fund level. In the case of a CAD 3 AIF, taxation is not at the investor level, it is at the AIF level. Hence, the investor doesn't have to pay tax. If any case, the taxation has to be at the AIF level and not at the investor level. But the advantage a CAD 3 AIF gets, which is if you see that item number 5, non-equity, which is highlighted in bold, if an AIF buys and sells mutual fund units, it is considered as a non-equity instrument. And when a AIF buys and sells mutual fund units, there is no incidence of tax. And at all three levels, I can say EEE tax regime works. If you remember the old tax regime, there's no tax liability when the mutual fund buys and sells shares. There's no tax liability when the AIF buys and sells mutual fund units. And there's no tax liability the investor has to pay when he buys and sells in India. And hence in India, in this product, it is sort of an EEE regime. The tax liability can arise in case the investor has to pay tax in his own country. Now, in many parts of Middle East, like Bahrain, Oman, UAE, etc., Saudi, there is no concept of capital gains tax. Many parts of Southeast Asia, like Korea, Hong Kong, etc., there is no concept of capital gains tax. And because there is no capital gains tax in those respective countries, there is no tax incident in those countries and in India. And because tax incident and tax filing is not required by the investor, tax filing is also not required by the Indian investor. When an Indian resident buys and sells a mutual fund, he has to file income tax returns in India. He has to disclose that in his investments in his income tax return. But when your NRI or a foreign national buys a dollar denominated UCIT fund or a Singapore fund or a Dubai fund, he doesn't need to disclose to the Indian authorities. Similarly, when he buys a gift fund, disclosure of that gift fund doesn't need to be done to the income tax authorities. And hence, tax filing also in India is very, very easy. So, again, to the 4, 5 challenges, KYC is fairly simple, no ease of documentation, PAN card not a mandatory documentation, only a passport can be enough for you to sort of start. Taxation, it is a very tax efficient manner of investing. Even if the fund buys and sells, there's no tax incident. Ease of tax filing, there is no tax filing required by an NRI into India. Idea is to attract foreign nationals to invest into India. And if you want to attract foreign nationals to India, there is no way that they're going to file income tax returns in India. And hence, tax filing is completely an easy way of investing. There is no issues of remittance and repatriation of funds because money can come from any foreign bank and can go back to any foreign bank. So it's completely ease of remittance and repatriation. And now comes to the last, which is currency. So the investor will invest in his own currency, whether it's dirham, dollar, pound, etc. At the moment, we have launched a fund which will accept money in US dollars. So if your investor transfers money to me in dollars, uh, when he redeems, I will give the money back to him in dollars. So the investor doesn't have to convert dollar to INR and INR to dollars. So the investor is saved from currency conversion from dollars to INR and INR to dollar. However, because the fund will be buying Indian mutual fund units, which are denominated in INR, there will be one currency leg, which is when the fund will convert dollar into INR mutual funds. There'll be a currency conversion view that the investor will take. But a fund, when it converts its currency, we get a very high preferential rate, a very low as maybe $10 as a fixed cost. While when an investor does this conversion, if the current rate is $1 to 87.50, when an investor converts, he might get a rate as high as 89. But when we will convert, we'll get a 86, 87, 60 or 70 as a rate. So the investor's return will go up significantly because conversion cost can be mitigated to a large extent. So why GIFT City funds for NRI investors? Ease of documentation. For us, it's a completely digital onboarding journey. Some of you must be investing through our K FinTech platform, uh, or K-Bolt. We've created a same digital journey, which means you don't need to fill 80, 100 forms. You need to completely do the journey digitally. Only 4 forms has to be physically signed by the investor and given to us. Second, tax efficient. You don't need to pay tax in India. Tax in case of many countries is tax free, even in their countries. And internally also, if you buy and sell, there's no incident of tax. So our strategy allows you dynamism to move between market caps and themes in a tax efficient manner. Money can come from any foreign bank account, and hence repatriation and remittance is not an issue. And you can invest in US dollars and not in INR. So your currency conversion risk is mitigated to a large extent. What makes our product unique to many other peers? Others have large cap to large cap, mid cap to mid cap, small cap to small cap. We are doing multi cap and themes. We also have flexibility that investor need not invest $150,000 all in one tranches. You have many investment options. In some options, you have an entry structure that you can charge to your investors and get placement fee. You can create a structure where you can stagger your investment 6 or 12 installments rather than investing $150,000 all at one go, especially in this market where you sort of feel that market is becoming quite dicey, so you can stagger your investments as well. Quickly, last 2 minutes, we are launching a global outbound fund, maybe end of this month or next month. This will give your resident investors access to invest into global markets. There is enough news that US market sort of is doing well. Um, Volatility because of Trump policies means investors will need global diversification as well. So we've created a strategy which will have a core of developed markets such as US, which will be 50 to 70%. Tactically, it will invest 30 to 50% in emerging markets, including China, Taiwan, etc., or themes such as semiconductor, blockchain, and AI, which can be part of the portfolio. So our global allocation fund will give you exposure of not only developed markets, emerging markets, but also emerging themes as well. And this fund can be for resident Indians to invest through the LRS route, uh, and take advantage of global diversification. Currently, $120 billion is the quantum of NRI deposits into India, and NRIs remit more than 100 billion every year, which is about 10 lakh crores to their family members into India. $50 billion is the demat holding by NRIs in shares, and in mutual funds, the AUM is just about $30 billion. There are almost 14 million NRIs living around the world, with 90% in 15 countries, 60% in the Middle East. All of you as distributors could not sell a dollar products. Now you can sell dollar products to your investors. You can now not only sell to NRIs, you can sell to foreign nationals and foreign companies. We sort of hope you got good insight. Thank you, everyone.